What's up everyone, it's Caddy with Money Investing. In this video, we are going to be talking about PayPal, ticker symbol PYPL. They are going to be reporting their first quarter fiscal year 2023 earnings on Monday after the markets close. So I'm going to break down everything you need to know about this company. It is indeed one of my biggest positions. So full disclosure, I do own PayPal. I'm going to be breaking it down for you: revenues, earnings, cash flows, valuation, balance sheet, guidance, earnings expectations, and the intrinsic value calculation, as well as the technicals. So everything you need to know. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, we've got a little bit over 3,700 members. If you want to join our Discord and our Patreon community as well, link's going to be down below, and you'll get access to all the benefits, all the alerts, and not to mention the private live streams, and of course, a lot of private benefits as well. So link's going to be down below. So this right here is going to be the earnings expectations. Now, PayPal is predicted to post adjusted first quarter 2023 earnings per share of 68 cents per share. That's going to be up from 43 cents same time last year. And they're also likely to report an increase of more than 50% to net income for the first quarter 23 after trimming cost in a challenging broader economy. So they have guided for cost cuts and of course reducing the headcount by 7%. They reported that back in early January, and pretty much cutting down about 2,000 positions in an effort to cut cost. And revenue is expected to climb about 8% to $7 billion. So those right there are going to be the numbers to focus on. Now, PayPal, I don't have to go into too much detail. We already know what the business is all about. We've covered this on the channel multiple times. And PayPal's main growth driver really is going to be Venmo. That's what I'm going to be focusing on in the earnings. But this right here is the revenue. Absolutely exponential and amazing growth here, going from 6.7 billion to over $27 billion. That's a little bit over 3 to 4 times growth in the last 9 years. And gross profit also growing from 3.4 billion to over $11.6 billion for the company. And operating income has also gone from 1 billion to over $4.3 billion. So that's a little bit over 3 to 4 times growth in operating income as well. Net income has been a little bit back and forth. Again, we've had some eBay pressures. We've had some other challenges, strategic investments that PayPal has made that have not really panned out. And as a result, net income has been a little bit more shaky. In 2020, 4.2 billion, 2021, 4.1 billion, and then a 50% decline to $2.4 billion. So I think this year the comps are going to be much easier for PayPal. It's possible that we do see a 50 to 70% growth in net income as we're comping over $2.4 billion in the bottom line. Now, when it comes to shares outstanding, very, very flat. In fact, consistent buybacks of shares from 1.2 billion down to 1.15 billion, and diluted EPS sitting at just over $2, and EBITDA has also been very strong, growing here 1.4 billion to over $4.9 billion in the last 9 years. So very nice and consistent growth in EBITDA as well. Margins have been good, 42%. However, some of the other margins have struggled. Again, they are lower from their 5-year averages. So net income margin has been closer to 14.5%, 15%. It's now down to 8.7%, so definitely a lot lower, and that will improve in my opinion over the next few quarters. And levered free cash flow margin consistent at 20% in the last 5 years, but now trading at 12%, right? So we are seeing a little bit of a slowdown. And these numbers are also on a GAAP basis. On a non-GAAP basis, numbers are much, much better, which I'll break down again later in the video as well. This right here is the balance sheet. PayPal sitting at just under $11 billion worth of cash with about almost an equivalent amount of debt, 11.5 billion. So we've got a net debt of 687 million. The current ratio is good, but the quick ratio is horrible. So again, short-term liquidity-wise, PayPal needs to come up with some additional cash or assets in order to make sure that they don't default on the debts that they have. So again, quick ratio is simply current assets over current liabilities, but we're taking inventory out. So that's something that we need to pay attention to. And debt to free cash flow also a little bit higher, but not really super concerning because again, the company's got enough cash to pay down almost all of its debt. And not to mention, they're also generating free cash flows of close to $5 billion. And that, I'm not sure that this number is actually correct because total debt's 11.5 billion and free cash flow is closer to $5 to $6 billion. So it's really 2 to 5, 2.5 to close to 3 number there. And I'm not sure why debt to free cash flow is showing up as 17.5 at the moment. Again, it might just be GAAP versus non-GAAP numbers. This right here is going to be the valuation. So about 18 times non-GAAP price earnings multiple on a trailing basis, and forward we're sitting at 15. So really, really low P multiples for PayPal. And it hasn't really moved much, right? So if you come over to PayPal's actual chart, year to date, the stock is only up 1.7%. You compare this to Meta, you compare this to Apple, you compare this to Microsoft, you compare this to AMD, Tesla, even the S&P 500 or the NASDAQ, PayPal has significantly underperformed its peers and of course the entire market as well. So it hasn't really moved much, and as a result, we're pretty much at the same valuation as we were just a few months ago or since the last earnings, right? When we pretty much got sold off aggressively, and PayPal is still indeed down from its all-time highs of well over $316, right? Down 78 to 80%. So valuation is still pretty low, again, on a relative basis, and I would say that it's got a lot of potential for growth, which we'll talk about here in just a minute. And price to sales trading at a little bit over 2 to 3, which again is incredibly low considering where it's traded in the past. In fact, at one point it was trading at 15 times sales, so very, very high price to sales multiple back then. And we got a 12 to 14.4 times cash flow. Again, a really, really low valuation is what we're looking at. Now, it gets even lower if you kind of forecast those earnings out. So this is going to be the analyst estimates, growing from 489, which brings the forward PE down to 15.3, all the way up to as much as $21 in earnings per share by 2032. And that brings the PE multiple down to 3.52. So even lower, like dramatically lower than where it's trading at the moment. As earnings continue to grow, as you can see that there is some linear growth expected from PayPal over the long term, and I think a lot of it is going to come from Venmo and some other parts of the business like PayPal branded checkout, engagement. That's kind of been the main focus for PayPal at the moment. And you can see the revenues 29.4 billion, expected to grow to 75 billion by the year 2032. Now, this right here going to be some of the expectations. So again, 68 cents per share, up from the first quarter 2022, but down significantly from first quarter 21. And this right here, again, the comps, right? Easier comps. That's why we're seeing a pretty significant increase of 50%, close to that number. And revenue at 7 billion, that's still going to be up from both the first quarter 2022 and first quarter 21. And total payment volume also is going to be up from the last couple of years and from last year as well. Now, this right here was the full year fiscal year 2022 summary. So we did see 2% increase in active accounts to 435 million. And 8.6 million net new additions for PayPal in that year. And this right here is one of my favorite metrics and probably the most important one, and that's the engagement, right? I don't really necessarily care too much about how many people are being added to the PayPal's ecosystem. What I really care about is how many people are using PayPal's ecosystem that are already in the ecosystem, right? In terms of how many existing users are using PayPal. Like for me, for example, I use PayPal once or twice every month, right? So that's probably going to be 12 to 24 times per year is what I'm using. So I'm a little bit below average, but on average, PayPal has seen 51.4 payment transactions per active account. That's a pretty high number, and it's a 13% increase year over year, driven primarily by Braintree transaction growth. So there are a lot of levers that PayPal can actually pull on. And this is total payment volume, of course, been growing consistently and now over $1.36 trillion as of last year. And non-GAAP EPS was $4.13. They're expecting this number to be $4.84, expecting some increase on a year-over-year basis, and free cash flow of $5.1 billion. So if you do the math here, very simple math, $5.1 billion divided by the current market cap, which is 84 billion. What we're looking at right now is a company that's yielding over 6% free cash flow yield, right? That's a free cash flow yield of over 6%, which in my opinion seems to be at a very, very reasonable and might even be low number. And that's a 16.4 times cash flow, free cash flow for the company. Revenue again, 27.5 billion. That was up 8% on a year-over-year basis. Now going over to some of the PayPal deliverables, again, they have seen very nice consistent growth in active accounts, TPVs, net revenues, non-GAAP and free cash flow, EPS and free cash flow here. And this right here is going to be the acceptance and ubiquity of PayPal, with the acceptance of 1,500 largest retailers across North America. And again, they still come out on top when compared to Apple Pay, Google Pay, Amazon, Klarna, Affirm, Afterpay, and ShopPay, with over 79% improvement in that area. This right here is going to be the global TPV, total payment volume, and you can see that PayPal branded checkout is still the leader. And then of course we got unbranded checkout, and Venmo is really kicking up right now with 3-year CAGR of the highest at 55%. So you can see that it's starting to get a bigger and bigger piece of the pie when it comes to checkouts, right? So Venmo is growing fast, and I think it's going to be a very strong driver for growth for PayPal moving forward. This right here, again, is active accounts and the transaction per account. So what we're looking at is active accounts slowly and steadily growing, but a much faster growth in that yellow line, which is the engagement, right? That's really the shift in PayPal's focus that we learned about a couple of quarters ago, when Dan Schulman pretty much mentioned that, look, we are kind of ditching our target of growing our accounts, but our focus is now going to be on engagement, right? Making sure the existing users are more engaged in the ecosystem that PayPal has to offer with Venmo, Braintree, crypto trading, or of course branded checkouts, whatever it is, that's where the focus is. And Dan Schulman, by the way, is also going to be stepping down after this year, so we're going to have a little bit of a change in management. Now this right here is the fiscal year 23 guidance. They're expecting about an 18% growth, which is actually good. If you compare 18% growth with an 18 times P multiple, we've got a 1-to-1 PEG ratio, right? We're pretty much trading at the same P multiple as the growth rate, and non-GAAP EPS of 487, and of course free cash flow of about $5 billion. By the way, if you do some very quick analysis here, it's trading at $75. 75 divided by 484, it's trading at 15.5. So actually trading at a lower P multiple on a forward basis than the growth itself, guided by the own company. Now, when we do the analysis here, this is going to be the expectations for CAGR, compounded annual growth over the next 5 years, and 9 years of 17%. But we're not going to price that in at 17%. Going to be very, very reasonable here. Let's just go with 14%, right? Let's just go with a little bit lower number, 14%. P multiple, I'm going to come back to that. 12% discount rate, 10% margin of safety, and minus 0.5% share buyback because the company's been buying back shares pretty consistently. And now we come up with a P multiple. What should we put down there? I'm going to go with like 16 to start with. And the fair value ends up at $78. And right now we're trading at $74.97. Let's just call it $75. That means PayPal at this moment could be argued to be trading at its fair value. If you go with a little bit of a lower P multiple, even 15 brings us down to $73, which is almost at the same level as where PayPal is. So if you come over to the sensitivity grid, I am literally going to the bare bones of the analysis here, 14% growth and a 15 times PE multiple. Even if you go with, let's say, 12% growth and a 15 times PE multiple, then we just come in under $70 per share. So in other words, in my personal opinion, these are prices where if you expect PayPal to continue to see some modest growth, which they are guiding for 18% growth here, revenue is also expected to grow. Analysts are expecting EPS to grow by 17% on average over the next 5 to 9 years. Even if we come in at a little bit of a lower number, even then, these are prices worth accumulating for PayPal, right? That's what the bottom line is, because I'm going with very conservative estimates. And you know what the actual fun part is with PayPal? That it's got the potential for multiple expansion. You don't have a lot of companies that have the potential for multiple expansion. And multiple expansion simply means that if the growth rate comes in a little bit higher than what the street is expecting, multiples for the company, the valuation multiple can expand. It can go from 15 to 18 to 20 to 22 to 24. And when that multiples expand, you see big moves in stock prices. Look at what happened with Nvidia. Look at what happened with Tesla before it was coming down, it was going all the way up. We saw multiples expand for these companies. Look at what happened with Meta, right? Meta was trading at 10 times price to earnings. And not only did they do a lot of cost cuts and earnings started to go up, but we also saw multiples expand. And now it's trading at 20, 22, 24 times earnings. A quick double in multiples can obviously result in the price to also double. So that's something to keep in mind, because it's trading already at such a low P. It's got the potential to see that multiple expansion if, of course, they play their cards right, if they are able to execute and grow their earnings consistently, even modestly. So talking about the technicals, we've got a little bit of a descending triangle formation here. So we've been making this, lower highs and this horizontal low. For the most part, we've just been consolidating sideways in that range for a really long time for PayPal. So I would keep a close eye at this support. That's going to be at $67. That's, again, another one of those estimates. If you want to really go with 12% growth rate and 15 times PE multiple, we end up at $67. That's going to be in line with this price over here. But a breakout and a potential resistance and a target is going to be at $87 per share for PayPal. So this right here is going to be that level to watch. And of course, we got other resistances to watch at 91, to as much as 100, to as much as possibly up to 141. So that's the entire analysis on PayPal. Let me know your thoughts down in the comment section below. What do you think? Are you buying, selling, holding? What are your thoughts on PayPal? Let me know in the comment section down below. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel. The link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.